JSE All-Share gaining 0.6%. At the top of the top 40, Exxaro gaining 2.5%. Sasol also steaming ahead, up 2.3%. Rhynhardt, what have you read in terms of market flow in today's session?
Sure. Well, I mean, I suppose one day is not a long time to make a call on, but look, I mean, market seems to be relatively quiet. Volumes are, I think, reasonable. Yeah, I suppose what stands out for me month to date so far is that retail shares have been very strong, and then some of the commodity counters are certainly doing quite well. I mean, Sasol, as you've mentioned, with the oil price going over 120, Exxaro has also had a very good rally. But other than that, a fairly quiet day in terms of news flows, I would think.
Well, we've actually seen around 8 billion rand passing through the markets. When you juxtapose that in terms of what we see in the US, we've been seeing very low volumes. In fact, 3.2 billion shares coming through in the US yesterday in the New York Stock Exchange. And that is basically just before the market crash levels in September 2008. The Dow, however, is at levels that we haven't seen since around June 2008. So a little bit of a difference in terms of what we're seeing. Where do you see South African markets going in the wake of the possible end to quantitative easing and also relatively low volumes in the US as well?
Yes. That's a very good question. I think that if you look at valuations of the SA equity market, it's certainly not where it used to be. I think we need to appreciate the fact that the South African equity market has done extremely well, especially in dollar terms. So if you were a foreign investor that put money into South Africa in 2008, you certainly made a lot of money. And I think foreign buyers do remain the marginal buyer of South African our equity market. And if you look at the shareholdings of many of our very large traded companies, the Massmarts, the Truers, the MTNs, foreign buying is very important for our market to continue steaming ahead. And I'm a little bit worried that has maybe run its course, hence the very strong rand that we are seeing currently. But just on a pure fundamental basis, I think the market's going to struggle to show you the same kind of returns of not only the last year, but certainly the last 2 years or so. I think we probably at the end of our interest rate cycle, meaning that I think from year on, I think inflation will start becoming more of an issue. Rates will start going up. The SA consumer is still heavily indebted, certainly has not deleveraged. So for our industrial or financial and industrial index, I think that's going to be quite difficult. And then you need to make a call on the commodity sector, and a lot of the commodity prices are trading at very elevated levels. So I think it's going to be quite tough going from here onwards.
Let's touch on Sasol. I know that it is one of your preferred picks at this point, closing at 393 Rand and 85 cents, as I mentioned, up 2.3%. In terms of buying it at this level, we've got oil prices at very close to $122 a barrel. We do have a very strong Rand. A quick view on Sasol.
Look, we like Sasol for a number of reasons. Look, firstly, if you look at the actual valuation of it, you're buying it on a forward P multiple of just under 10 times. And with oil prices where it currently is, so let's assume it stays at about $120 and the Rand maybe weakens marginally, Sasol will probably earn anything from 40 Rand to 50 Rand a share. So on a pure earnings multiple basis, it does look relatively attractive. Secondly, Sasol has done quite well of late, but it has lagged most of our local commodity shares for the last year and a half or so. And the bulk of the outperformance only really came towards the end of last year and year to date. So it is a bit of a laggard in that regard. So it certainly looks quite interesting. And then looking at the oil price, who really knows where oil is going to go? But if you strip out all of the short-term noise about Libya and the political unrest, I think if you compare the rise in the oil price relative to other commodities, whether it's iron ore, maybe even copper, the rise has been much more steadily, and it's trading not as far away from marginal cost as, say, copper or iron ore. So we feel a little bit better about oil in general.
Okay, fantastic. Let's touch on Raubex. See how you feel about the construction space. Expects a headline earnings per share to be between 20 and 30% lower. Very quick view on Raubex, and we know that construction is in the doldrums.
Yes, it has. I think the key takeaway is that earnings are down 20 to 30% for the year, which is about 15% below consensus. But if you look at their run rate in the second half, earnings were down about 40 to 50%. So it's clearly very tough going in the last 6 months. I think road building margins are still quite elevated. It used to be about 10 to 12%, it's now about 7 to 8%. That compares to the average industry margin of about 3%. So there's still quite a bit of downside. So I think it's going to be a pretty tough year ahead for Raubex, and it's quite likely that earnings will decline even further from the current base.
MTN, the second worst performing company on the top 40 today, down just over 1%. Perhaps in a deal in India, perhaps not. Speculation closing at 138 Rand a share.
Yes, I think MTN has done very well the last month or so, so it's probably not surprising to see it just pulling back. Regarding corporate action, there's been no official statements by the company, but you can't really rule it out. I think it's no secret that MTN has been interested in that Indian market for a couple of years now. They failed in a couple of bids, so it wouldn't surprise me. I think from a strategic point of view, it's quite interesting because you saw Bharti moving into the Nigerian market. Now MTN wants to go into the Indian market. So maybe it's a bit of a strategic, say, move to have a bit of a representation in the market of one of your large competitors. So I would say it makes sense. Let's just hope they don't pay too much for it.